Hello everyone, I'm James. Let's go through the charts quickly. It's Sunday afternoon right now. Markets open in about 7 hours time, so no rush, no panic. Now going into the weekend with all this political stuff going on and the US envoy in Iran and all sorts of weird stuff going on in the markets because of the tariffs which affect natural gas as well, because natural gas and all energies are affected by industrial demand, output, production, transport. And natural gas is obviously involved in that, and we saw that big drop-off in natural gas along with most other things when we saw the tariffs being announced. They've been peeled back a little bit now, and we saw a bit of relief in some of the markets, including natural gas. But after quite a sharp relief rally in natural gas, we began to drop down again. As you know, we got short at the top of that line there, just at that previous swing low, a couple of swing lows, double bottom there, previous swing high, obvious support level, and the 3.75 level, which has been in play for years now, and we've been trading off that. But the moment we got back down to the trend line from the top side now, and also this other support down here, closer to 3.4, we bounced off. And that bounce took place late on Friday, and because we got that double tweezer bottom, not quite a tweezer, but certainly two spike lows. First of all, I hedged half of my short position here, and then when we started bouncing up towards the close of play on Friday, I exited the rest of it. And that was based on this twin double bottom bouncing off of these spike lows off that support and trend line. And what I did late on Friday is I put a very small position on, having said to my private group, probably not a good idea to go long or short on natural gas going into the weekend, considering what's going on with the US envoy to Iran and whether those talks are successful or not, probably not. This might affect the price of natural gas and oil. But I've only taken a very tiny position there, and if we do gap up, I'll be in the pound seat, and if we gap down, I'll have to hedge that position immediately and then consider going short at the same time. However, I don't think there's a high likelihood of the natural gas or oil price spiking down as a result of the talks this weekend. If anything, they'll probably spike up. So that's natural gas. The same thing goes for WTI oil. We were long a few days already at the bottom of this channel line, having broken down through Moab and now looking for a bounce back up to Moab, the mother of all breaks, and then for a resumption of the downtrend. I've still got my red path in here, which I had drawn in here quite a long time ago, maybe a month or two now, and that's aiming down much lower, and I still think that's the most likely path. So what's got to happen now is that probably we've got to bounce back up to the underside of that Moab zone, and that's in the 65 to 66 region. I'm not ruling out a bounce back up to the top of the channel, or at least these moving averages into the sort of mid 60s to high 60s, and then maybe into the low 70s. A big rally up could take us to the top of the channel and even slightly above that if we break up through there into this order block above, and that's into the high 70s. So we're long for now and looking for this to carry on moving up. I'll consider hedging or taking all or some of my profit here at Moab, and then we'll decide what to do after that. So that's crude oil. We're still long on URA. As I said, we looked at the futures on this. We have been looking repeatedly. This is the weekly futures chart on UX1 Shriek, the uranium futures, and you can see for 4 weeks in a row, we've been going sideways, almost no movement at all. The URA ETF has dropped back a bit, but we had quite a sharp rally last week, at the end of last week. We haven't added any long positions on here yet, and I've just been waiting to see how this works out. We're now back to almost where our last position was, so we may have lost out at the opportunity to add some more. But nevertheless, I'm looking for URA to move much higher, and gradually over time, this is going to be a jiggledy-piggledy, slow-moving, zigzaggy type of instrument like many instruments in energy are, as you can see looking back to the left. But overall, I think we should be near a bottom, and the futures give me that inclination. This chart over here showing that we've based moving sideways at the 200 period moving average and this Fibonacci retracement level, that's the 50% retracement. If we zoom in quite tight, you'll see there's actually a little bit of space for us to perhaps get a touch lower. We're just a fraction above there right now, maybe a dollar or two. So we'll have to keep an eye on that. But it looks like we're trying to base there, and URA actually trying to make a V-shaped recovery. Let's look at it like that. Let's go across to currencies. We've got a couple of plays on here. We're short on the euro yen. I'll refer to last week's video on the euro yen, but we're still looking for this sort of path, just to remind you. And I've gone into it in some more detail in my last videos. But generally I'm looking for a move down to 144, following this rise, flagpole, bear flag, and the next pole or move down should take us an equidistant level down to 144. I put on another new trade on Friday as well. That was on USD CHF, the Swissy, looking for a bounce off the support line. Very, very simply because we've had a massive move down. It's incredibly oversold. It's a very unusually large move. And I'm looking for a bottom than this, and I think we may have found one at this falling trend line. This goes all the way back to 2016. Let's go to the weekly chart to get rid of some of the noise, and you can see how this line has been quite important over many, many years, going back to 2009. A support level there, multiple occasions, just about a resistance level there. an area of consolidation over here, and then support on multiple occasions thereafter over there, there, and now where we are currently. So I expect a bit of a bounce on this. We may extend this move slightly lower. I hope not, but we have a small position on there. I'll be looking to add some more onto this if we do get a decent looking reversal. So far on the day chart, there's no indication of that. Tiny little wick at the bottom of there. And on the 4-hour chart, you can see we're just trying to form a base there. Lots of ups and downs, but what I do like is this inverse hammer candle pattern, followed by this bullish engulfing candle, and we're just trying to hold there today. So it looks all right on the 4-hour chart. On the day chart, you can see we haven't really got going to the upside at all yet after that massive move down. Bear in mind that over the last week and a couple of days, we moved down from 0.88 to 0.81. That's a 700 pip move in about 7 days, and that's absolutely massive. So we're trying for a long on there, and we have a short on the euro yen. So going across the stocks, this has been particularly difficult. Massive moves. We again want to refer you to the last video. Please have a look at that one. It's very difficult to go over these ideas time and time again in every video, so try and sort of refer back when I can. But we've had this big move down, 15% rally a couple of days ago, big drop back down again. Doesn't look as big as the rally, still a massive drop. And then a massive rally yesterday, even though it looks tiny, it was a big move up. And we're holding up there now. So we've actually unhedged this position, and I've kept my long position open, and that's from a long way above us. I don't even want to sort of consider when we'll get there. Maybe quite quickly, who knows? I don't know if we're in a bear market or a bull market, but my inclination is we're still in a bear market. We moved down from the top to the bottom of the NASDAQ by 26.5%. So that's definitely bear market territory if you consider that 25% is bear market territory. And the S&P has moved down 21%, so not quite into bear market territory. Once again, some people think 30% is bear market territory. It doesn't really matter. It's definitely moving down. So in these big bear markets, we get massive counter trend rallies. We've seen that already. And you can see on the NASDAQ, for example, we've only rallied back up to basically the trend line and the 20-period moving average. So we're definitely still in a bear market, below the trend line, below the 20-period moving average, and still below the top of this order block, even though we're above that one at the bottom. So I have to assume that the NASDAQ is in a bear market. The S&P is sort of touch and go right now, but let's say the NASDAQ is in a bear market. So I'll be looking to exit my long trade at break even, if we get there. And then I'll be looking for opportunities to sell into this market, bearing in mind that in these big moves down, the first initial moves, we can get a retracement of 61.8 or even 78.6 back towards the top. So let's put a Fibonacci retracement study in there and see where those levels are. Let's start with a 618, and that's up here at about 20,000, a good round number. I think we could get there. And then the 78.6% Fibonacci is all the way up here at 21,000, also a big round number, and also where we've got some order blocks and resistance and previous support levels and so on. So 20,000, 21,000, if we get to those levels, I'll be happy. But we'll still be in a bear market. We'll still be below the 78 or the 61.8% Fibonacci, and we're still in a bear market. Right now, we're very solidly and firmly in a bear market. We haven't even broken the 20-period moving average or the most recent downward sloping trend line. That's all I'm going to say on stocks, folks, and really, however this goes will affect the way everything else goes, including the S&P, and then some of the names that we've got on, long on MSTR, Tesla, Coinbase, and Google. Nothing's changed with that. Those all got quite a good bid, in fact. Particularly the Bitcoin ones. We'll come to Bitcoin shortly. MSTR and Coinbase getting a great, decent bounce. And then Tesla, not too bad, actually. And Google just picking up a little bit. So I'm happy with all of these names. It seems like we picked the best of perhaps a bad bunch. The other one I'm looking at actually is Target. And just simply have a look at this, just to put this in your trading pipe to smoke. There's the long-term pre-COVID trend line. This is the post-COVID rally. We've dropped back down towards that trend line. We've broken the 78.6, so it's bearish from that perspective. But if we do get down to that trend line, I'll be interested in buying Target. We haven't quite got there yet. Just a few more dollars to get down to about $84. Maybe just a pierce of that trend line, maybe down to 80 and then a bounce. So an interesting play. Let's have a look at this on the weekly chart. Just quickly zoom in, make it look a little bit more interesting. So there's the pre-COVID trend line, very clear, and that order block, and that's the blob where I'm looking to buy Target. All right, so I'm not going to talk much more about stocks. We can go on to Bitcoin. Bitcoin bounced. We love that, of course. And we're back into a bull market perspective from one point of view, in that we've broken back up above this long-term red rising trend line. We broke down there. Of course, we tested that trend line so many times. Trend lines don't last more than 3, 4, or 5 touches before they break. And that's what happened on this occasion. We're now back above that red trend line, but we're still below the black downward facing trend line, and that's the sort of definitive trend line of this move. If we can break above there and close above there, and particularly this level here at 88.5, that's the key level. If we can close above that double top swing high, we'll be above all the moving averages and this trend line and all this sort of mess and noise below us. And then we can start heading higher. My strategy now is I've already got 2 tranches on here. I'm going to add another one at 84,100 on the dip back down there. And that's where the CME gap is. Let's quickly have a look at the futures chart. So right there on top of that candle. And that's at 84,050. So I'm going to add another tranche on there, little bits at a time, and then probably something like every $5,000 on pullbacks. And I'm looking for Bitcoin now to reapproach the highs that we reached last year or early this year, whenever it was, I think sort of into this year, and then for a move much higher than that. So that's going very well. But we still have our long position on Ethereum. That's bouncing up nicely. First target, I think 2,100. Let's quickly look at that. We talked about this premature overshoot of the M pattern, the completed M pattern, and that we're too early, and we are now bouncing back up again. We are now above that 78.6% Fibonacci again. That's good, and I'm looking for a move back up through these 2 black lines here. First of all, those are both act as minor resistance, but then the big fish, the big target is 2,100. That's what we're aiming for on Ethereum, and I also have a long position on XRP right from the bottom. Now, gold and silver, just to reiterate what I said in the last video, we're still short on gold. We're way out of the money now. We're short from quite a long way below us. Not that bad, actually, because these are small positions. But right at the end of the day, we formed a tweezer double top there. But at the same time, we have a long position on silver. And silver, the last candle of the day, just went ballistic, went berserk, and rallied right up. This is the day chart. It looks more impressive on the day chart. But look at that close on silver compared to that flaccid double top tweezer top on gold, which means that gold might be rolling over. I'm looking to add another short position to my smallish gold position, and at that time and it's probably coming up quite soon because we've got these moving averages right here and this trend line on silver. So if we get up to 32.6, something like that on silver, and then start to turn down, let's see what that looks like on the day chart. So somewhere up there, that trend line, the 20 period moving average and the 50 period moving average, a really good place to take profits, and perhaps then silver will start moving down, and at the same time perhaps that's when gold will start moving down, and I can add some more shorts to my gold. I can use the profits from my silver trade, which have now already covered the floating loss on gold, and it's worked out as a perfect hedge. I didn't know that silver would go ballistically upwards while gold sort of staggered upwards and then slowed down and crawled to a halt at the end of the day, where silver picked up pace. I didn't know that would happen, and that's not the reason I hedged. I thought they might move in sort of tandem, but silver did us good, moved up much faster than gold, and covered all of those floating losses, and we can now benefit from the other direction of the move. Once this starts moving down, take profit on silver, add shorts to the gold trade, and then take profit on gold. Now gold, I'm looking for a much lower move. Let's have a look at the day chart just very quickly. We've spoken about this many times as well before. I'm looking for gold to move down to this much longer term trend line. That would be the ideal situation to get down into about 2,300, and it's not out of the question, but much more likely as a move down into these order blocks, we get these $500 rallies. I could actually clone that and put another one there. So 500 up, sideways, 500, sideways, 500, sideways, 500, sideways. And I think that's what we might be entering now. We've gone a little bit further than normal, just a fraction. But this is the nature of gold. We get these long, massive rallies followed by long, massive consolidations. And I'm looking for this consolidation to begin. First of all, that trend line, and then this trend line, the most likely place for it to stop, maybe into these order blocks, the 200 period moving average. And then even if we had a dramatic sell-off much further, we'd still be in a bull market, even if we dropped all the way back down to 2,300, 2,200. So keep that in mind. It's a possibility. It's unlikely. We'll probably be aiming for somewhere in this region here. Quite where in there, I don't know at this point. Right, going across to this page, we got the RAND, VIX, TLT, US10Y. US10Y still moving up. Another higher high, higher low on Friday. Same with TLT, lower low, lower high. So I don't know what's going on with the bond market. It's just very, very strange. We're seeing, differences between gold, oil, the bond market, stocks, all moving out of correlation and behaving in extremely weird ways. And that's tariffs for you folks. That's the effect of tariffs. Going across the softs and grains, everything getting a bit of a bid on Friday. We're long on sugar, corn, cotton, wheat, and soybeans. And those all got quite a good bid towards the end of the week, actually. Particularly soybeans, wheat, and corn, even cotton holding above its trend line. Orange juice getting a bit of a bid. We don't have a trade on that. And then coffee, we're short on coffee. We did take half of our profit off here at the top of the channel, and we're looking to resell into further rallies. My target for this one, once we've managed to resell, if we can, is the top of the channel again, then the bottom of the channel, and then below the channel into more historically sensible levels down here. So that's coffee. So we're looking to sell cocoa. We are short coffee. We're looking to sell orange juice. Let's just check on Bitcoin before we go. So remember, I'm looking to add another tranche on 84,100. If we dip back down to there, that's because that's the top of the CME, last candle on Friday. So we want to close that CME gap. I don't know how we'll close off here later on today. If we do have a CME gap, remember it might be closed. And the same goes for Ethereum and XRP. If there are any gaps, those might need to be closed over the weekend as well into next week. Well, folks, I hope you enjoyed that video. It's been great speaking to you again. And if you enjoy it, please subscribe to the channel. Please join the channel. All sorts of perks coming along. And if you missed out on the early bird natural gas course, there's a link below that you can make use of a 30% discount to get in at the last minute. Take care.
Charts to read and trends to spy. MACD's low, oh my, oh my. Baby, don't cry. It's a funky little hustle with a sweet tie-dye. Click it, flick it, make that gain till Jerome Powell drives us all insane. Shoo-wop, tick-tock, flash that trade. Got a candlestick rhythm that just won't fade.